Hey there, welcome back, guys. Today we're going to look for strength and weakness in the stock market. It's important to see relative strength when you have a weak market, and it's important to see relative weakness when you have a strong market. And I think that will give you a tell on the big moves or the future price action of those stocks. So everyone knows, obviously, who's been following me. I've really been bearish for about a year and a half, and that really all stems from this chart right here, the S&P 500. And the Fed has done a lot of they've done a lot to jump in here and rattle the markets, moving them back up. But ultimately, just so everyone understands my thesis of why I've been bearish, and really I started this channel right when I became bearish. So most of the videos on this channel are longer term bearish, although there's I have been long certain things. But again, this is your bull market on a weekly chart, and going back to 2009, you can see this purple line ramping up right here. And I didn't just draw this line randomly. It's touching the lows of 2009, and you can see all the reactions that we've had along this trend line here. Reaction right through here, and then we broke, and we even had a reaction from underneath, or we had a back test. You can see right here where we broke. Here's the break, and we did a kickback right to that trend line. If I zoom in, you can see it right there. And then we broke, did another kickback right to it. So all the reactions around that trend line verify that trend line. And then we had another final reaction right up here, right before the big sell-off in March, February and March. So that's the trend line. That is longer. That's your longer term bull market trend line. And we have not been moving up. We have been moving sideways. And the only thing that's really kept us from moving down is the Fed. So here's the first attempt at a bear market. So we broke the trend and we started a bear market. This was your first natural attempt. And the Fed jumped in there and didn't let it happen. And they created this move higher here in 2019. Then we got the pandemic. And then this was your next attempt to reset prices, and it probably, and we fell even more from a higher spot, and this is the Fed jumping in again. So both of these rallies, since we broke the bull market trend, have been created by the Federal Reserve pumping stimulus. Here they were hiking rates, and then they did a 180, and they were hiking rates and reducing their balance sheet. They reversed cut rates 3 times in 2019 and started, increasing their balance sheet. So this was 2019's rise. And then here was obviously dropping rates to zero and, pumping trillions of dollars of stimulus. So the reason why, when I say I'm bearish, is because the natural market forces want to push this to a bear market, and the Fed's just trying to do everything they can to not let it happen. So here's the damage of what's happening due to the Fed. We look at the dollar here, and the dollar is starting to lose value pretty impulsively. This is a weekly chart. Now we are at longer term support, and I've pointed this out. Here's your support going back to 2011, and it's been this uptrend. We've held this support line several times, and we're there right now again. So here we are. We're just slightly undercutting it, but a pretty big move in the dollar today, down 50 or half a basis point. That's a pretty good move in the dollar. You can see the dollar is just moving straight down and kind of collapsing a little bit. So it should hold support here. I would think that we're going to get some sort of a reaction. This looks like an undercut, and then we're going to, by the end of the day, I suspect we'll hold this and, get some sort of a rally in the dollar. But ultimately, we're at long-term support. If this does not hold and we end up breaking, look for some real damage to be done. Now, stocks could continue to move higher with a falling dollar, but realize that prices all around you are going to continue to rise. So this is not good for a strong economy, even though it's good for the stock market. Not good in general for consumers and for just the everyday person who's earning salaries and wages in dollars. They're essentially losing. It's like getting a demotion and losing, getting a pay cut essentially, but doing it through the back door, which is through inflation. So again, we'll see. We'll watch this. But this, this is why, going back to this SPY chart, this is why I've been longer term bearish, because the market is trying to naturally have a recession and the Fed is propping it up. This is Fed stimulus. This is Fed stimulus. So it's not a natural market for sure. All right, now let's get into some stock ideas and we'll look at some things. All right, so we've got Microsoft and we've got Tesla reporting after the bell on Wednesday. So we got to continue to watch these. So let's go to the hourly chart here in Microsoft. And look, selling off right down to support here. So again, it looks like Microsoft's probably going to report earnings and we're going to be right around support. And, depending on tomorrow, it'll probably go into a holding pattern and we'll most likely just grind along this trend line. It might even slightly break it. If we break it, maybe the earnings report comes with a big gap down. That could be in play. So if that happens, there's going to be some carnage in the markets. So that's the setup. Nice impulsive sell-off today, right down to support in Microsoft. We'll have to continue to watch this because there is a potential big gap down coming in play. Doesn't mean it will, but the divergences that we have in the RSI and the PPO signal that the momentum is now fading even more. Obviously, the PPO, ramped up yesterday, but still didn't take out the divergence. And same with the RSI. So still have divergences, negative divergences, telling you the momentum is fading. There's just no sell signal. It's still above support. This was kind of a sell signal, but it wasn't that impulsive. And then we obviously recovered it yesterday. We're coming back down and holding it. Now, does it hold support and earnings gives us a big gap up? It could go either way. So ultimately, I don't think there's a play until after earnings. So we'll have to just continue to watch this. Okay, let's flip over to Tesla. Tesla, to me, looks like this was a big, massive back test. And so here's a daily chart, and you can see this is the trend that we held, so 3 reactions. It broke, but it just drifted sideways. And then it ramped up and did this full back test. Didn't quite get there, though. You can see the back test would have been all the way up here around 1900, and we only got to, about 1800. I think 1900 was the full back test. And then, this is kind of a reversal candle here. Didn't get much follow through, and it's gone sideways. So for me, this one's a no touch. But going to the hourly chart, maybe if it fails here, this is a lower high. So here's your higher high, lower high. Then you look for a lower low. And that should probably set this in motion to start filling some of these gaps. Lots of gaps in Tesla on the way up. You've got a gap right here. And that gap sits at about 12.26. You've got a gap right there sitting at about 11.30. Again, this is a $1,600 stock, so it could be off by a few bucks, but 11.30. You've got, and then you have a gap all the way right down here at 6.50. So 3 gaps in this thing that probably are going to get filled at some point in time. So that's the trade. I think that's the next trade in Tesla is to the downside. Huge ramp up, but I think it's, we need some sort of a catalyst to set the momentum to the downside in motion. Until then, I just don't think it's worth getting in because the momentum is just strong in this to the upside. So I'm not looking to short this until I get some sort of a catalyst. But we did take the trade right here. This sell-off trade, I took that, closed it at gap fill, and really that was about the right trade. It did undercut it slightly, but not that much, and just went sideways. So for the most part, captured most of the trade, and then obviously it's ramped higher since. So I'm glad I'm out of that one, and I'm just watching it. So Tesla earnings after the bell on Wednesday, Microsoft earnings after the bell on Wednesday. Expect some action to take place on Thursday. Okay, let's look at this KHC. I'm just going to flip around and throw out some ideas of things I'm looking at, things I'm trading. KHC. So I'm long this stock right now. I just got long. I like the price action that I saw. Even though there might be a market sell-off, this thing continues to show strength. So to give you an idea, like Tech is down today, and tech is the strength in the market, but this thing's up. It sold off yesterday, and I like that. So I entered that yesterday at the end of the day. I like the sell off, and here's what I like about it. This thing can do one of two things, though. I am fully aware that we could go sideways or even sell off slightly, but here's the thing: could be a basing pattern. I see a nice solid base. I see a inverse head and shoulders right here where we made the head right there, and then this is kind of your second shoulder. But here's really what I'm really honing in on, which is this gap, and everybody sees this gap. This is a big gap too. To the top of the gap right here to where we're at, this is a 27% gap. So that's kind of the trade idea right now, is a gap fill. It might take some time to do that, but this thing's paying if I go to the dividend down here, it's paying a 4 7/10% dividend. So you can afford, you get paid to hold this thing for the gap fill. So it's got some nice income and appreciation as part of this trade idea. And so that's kind of the trade that I'm looking at. And here's what I like about it. So gap entry sits right here at 36, but you've got this big basing pattern. And if I go to the right below it, right here at about 33.70 is major resistance. You can see lots of reactions here, reaction right here, reaction here, reaction right here, and we broke above it. And then yesterday you can see we started to come down and do a back test of that, which should be support now. 33.70 right in here, 33.50 should be support. So yesterday's price action looked like a test of that support. It didn't quite get there. The buyer stepped in. I was one of them, and we're moving higher. So that looks good to me. And if you look at the weekly, it really defines that resistance a lot clearer. So you can see it right here at 33.60, and that's just nice, clean resistance. And it's so when you have a nice, that's kind of a neckline on this head and shoulders idea. So you've got your shoulder, your left shoulder, your right shoulder, your head down here. Here's your neckline. We broke the neckline, and then just going back to the hourly, we back tested, and now we're moving higher. So in general, positive chart. Also, one other thing, I want to point this out. You've got some positive divergence in the RSI right here, and you do have it in the PPO as well, right there on the daily chart. So you can see positive divergence. Sorry, it's not really divergence. It's positive trend indicators. So indicates positive momentum. So I think, we'll see. But ultimately, the trade idea is gap entry at about 36. Look for this. What I think it would do is probably gap entry, run up, maybe tag this 42, get a reaction, it maybe move down a little bit, and then finish filling that gap. And that's the complete trade idea at this point. So that is something I'm looking at. But in general, I see positive. I see a very constructive, positive chart that I like. Let's look at some of these gold miners. So I actually just sold this today. I sold my, I had some Agnico Eagle and some Barrick. Sold it today. Hopefully I don't regret it. But it just looked like it was at a good spot for selling, And the reason why is, look, here's what I see in Agnico Eagle, just to cover some gold miners. Upward channel. And the reason why these are really interesting to me, these gold miners, is because the dollar is really losing a lot of ground. So should be very bullish for gold. But again, there's a lot of people in this gold trade now. I've been bullish gold really since 2018. I've been saying in almost every video, pointing out that Barrick Gold was a screaming buy. And since then, the thing's up, huge. I'll cover that here in a second. But upward channel here in Agnico Eagle on the hourly. We overshot it at the open, and that looked like an overshoot. Since then, it's sold off. It's now back below resistance. So I think we're probably going to, sell off, maybe come down over time and hit the support line. In general, these miners are still in a bull trend. And let's go to the daily and look at some of the bigger picture stuff. So you can see, on the daily, there's a bull trend right there. You definitely have support on this one. And this is major support right there at about 58. So that's a great area to buy at if you do get it. And that would mean that we're going to break this uptrend channel. So something to watch for. In general, the trade could be just a run down to the bottom of this price channel. But we got to watch the dollar. If the dollar keeps falling and doesn't hold support, then these miners should take off. And we're seeing that in silver. Silver's really ramping up. Let's look at Barrick Gold here. Barrick Gold, kind of the same thing. We were up near resistance, which is right up here, up around this 29 bucks. Starting to sell off. We'll see what happens on this one. And daily looks bullish. It's a constructive bullish chart where we're making higher lows. If I roll out to the longer term, I was bullish Barrick all the way down here. And so I actually bought some all the way down here when it was tagging support. I mean, from there, the thing's up almost 200%. So it's a pretty good move. And now you've got a lot of people piling into these things. So it's almost consensus now that gold is going higher. And anytime anything becomes consensus, you usually want to look for the counter move, wash out some of those late, those weak hands, those Johnny-come-latelys. And then that gives you an opportunity as a strong hand to jump back in. But in general, this is obviously a bullish chart. You're making higher highs and higher lows, and it's very constructive. And if you roll out to the weekly, obviously you've got a ways to go. This thing is just now. Here's some major, here's the resistance right here at 28.40, and this is when I sold in the past. Right here, I sold right here at 28.20, I believe is where I caught it. We dipped back below, but now we're ramping back up into it. So that's bullish in general. I mean, this is a second test of this resistance. Could break. We could break this resistance and run higher. So I'm definitely keeping an eye on it. And let's look at Qs. Qs is weak again today. However, Microsoft and the FANG stocks are all on deck, and I think it's there's too much that could happen, so it's going to be a little bit crazy. We need to, really that additional information from the FANG stocks with the earnings will help us understand where this market might go. Qs could ramp, just continue to do the blow off top price action that it looks like it wants to do, or this could be it. Today's price action, this is pretty impulsive. This sell off followed by, yesterday's price action was running higher, and today they're selling it down pretty aggressive. So maybe everyone's taking earning or profit before the FANGs come out and report. That could be a sign that the market thinks the FANG stocks are going to report negatively. And better safe than sorry. I would agree. If you've been long the tech stocks, I think it's pretty prudent to take some profit. Move your stops up, although they could gap down and jump your stop, which is most likely what they would do. So I would be looking to take some profit ahead of earnings. You can always add it back. Yeah, it might cost you a little bit more, but I think it lowers your risk, and this game is all about risk reward. So take the profit is what I would do personally. That's just my opinion. And we're making a lower high right here. So if this is a lower high than this, then probably going to break down. Now, what I'm looking for is, ultimately you've got major support down here that it's been holding. But if we break this support, we're breaking two supports. We'll break two supports at the same time. And one of those supports comes back to the weekly, which is the bull market trend resistance. We've started to trade above it right up here. But here's your resistance right up here. And we're above it. Anytime you get outside of a channel, that's high risk area. So if you have an upward rising channel and you get above it, that's a high risk area. And if you have a falling channel, descending channel, and you get below it, that's a high risk area. Usually those areas are just they're usually fake moves. They're usually, the channel is usually your prices move upward in channels. When they get outside of it, that's usually the extremes, and you see the snapback in the other direction. So this is a weekly chart. We've obviously overshot this channel on the weekly. This is our third week up here. So do we have a big impulsive selling week this week? Maybe kicked off with Microsoft earnings. It's possible. We have to watch. And let's flip to Adobe. So I pointed this one out yesterday, and I did get short this one today. Excuse me. The reason why I like this is look at this nice clean upward channel, just robotic. You can tell that the algos run the market. Of course, people control the algos, but these computers they create these really clean charts sometimes when there's, volatility is not that high. Although volatility has been relatively high. So, but anyways, nice clean price channel moving up. We broke the price channel here. So this would actually be your sell signal right here, your first sell signal. Nice impulsive breakdown. So everything you need to see, I guess, from a breakdown standpoint, but then you get the kickback rally. And again, these are designed to wash out anybody that takes that original signal. The market's always trying to give you a signal and then try to shake you off of that trade. And that's how it bleeds money out of people, basically. And that's what they want to do. They want to continue to bleed money out of people. So they'll give you a trade to take, and then they'll try to trick you to make you think that that's not the trade. So you let it go and you give up losses and continue to bleed money. And that's what this does. So this was actually a great objective area to short. It doesn't really get much better than that. I mean, it's like to the penny, this back test. So now selling off down 2.73, profitable on the trade, and looks like it's moving lower. So if this holds and we don't get any more back tests, because it can do that, it can continue to back test, or we don't recover this trend line, then this looks like a good short. And even though tech has been strong and Adobe's been strong, I mean, if you look at the bottom here from the lows, Adobe's up 83%, almost 84% at the highs. So that can go the other way pretty quickly if this is going to start to sell off. So we'll look for probably a move down to trying to find some support. Probably right. Looks like there's a gap right in here. I'll have to tighten it up a little bit. Maybe right in here. That looks about right. 410 or so. You can see reaction here, reaction, held that as support, and then we came down, didn't hit it yet. So maybe that's kind of your first level of support, and then there's probably some levels below. So I'll tighten this up as this continues to work, or if it continues to work. And I constantly look for opportunities to fade the crowded trades. The crowded trades are the stay-at-home stocks. A lot of them really went parabolic, so I am always looking for opportunities to fade the crowd, because if the crowd's piled into one stock or one trade idea, then any kind of catalyst and the crowd rushes for the exits, and that's where you want to be when you're looking to fade that. You want to fade the crowd so that when they rush for the exits, you catch that big move. It's the same thing as buying something before the crowd sees it, like Barrick Gold before it went up 200%. But here's Zoom. So Zoom, the crowd obviously has gotten, ramped into. So we're looking for signs of this to break down. We've got a longer term, we've got the support line down here, which is down here at about 217. That's down a ways. I mean, but it's hard to short it right here because there's just no catalyst. But it could easily come down to, 17.5% to touch this support line or even break it. I just don't see the catalyst yet to just get short right up here. We did have the one thing that I can say is, I guess, a bearish case to get us down to the support line at least is here is your outside day. This is a reversal candle right here, outside day. And we did get some follow through right here. This is some follow through, and it looks like this was just a kickback rally, but it didn't recover the outside day candle. So that does look like a reversal candle. We did get the confirmation selling several days in a row, and then they did a kickback, tried to shake everyone out, and it looks like the selling is resuming. That's how I read that. So that might be enough to bring us down to tag this support line, or maybe chop sideways and then roll over and tag it. If we sell off here, maybe it's a 10% down move. And then we've got to break support, and that would be the big move down, the next big move down. So we'll watch for that. I'm kind of 50-50 on this one. Not quite sure, but I'm going to watch it a little closer and see if I can pick up anything else that tells me that this wants to at least tag this support line and maybe even break it. We won't see the break, obviously, until we get down to the support line, so we have to continue to just watch this. But maybe maybe that outside day was the top and the reversal in this, and we're now setting up for a big move down. Something interesting here on XLV, and then I'll probably wrap up. So XLV was a short that I got short right here on the breakdown. You had the nice uptrend right here. We broke that trend, and then it was a short, but then the thing just there was no follow through. It just chopped sideways and just was chopping everyone to death. Bulls and bears. Just kept chopping them to death, and it didn't want to break. Well, now recently you can see we've run up, and we've got this resistance line where we had a reaction here, reaction right here, and look, you can see that this is where it's topping out on this move. We overshot it a little bit, but it looks like it's starting to struggle right up in here. So, you know, we look for some sort of a topping candlestick, some sort of a breakdown candle would signal that this is the end of this move, and that would set this up for a move all the way down, at least to this support line, which is from here down, you know, about 8%. So that's a possible trade idea. Just need to wait to see how the price action plays out. And I think I've gone on long enough. So if you find any value from this content, leave a comment below and give me a thumbs up. It does help the channel. I appreciate that. And I'll continue to try to find good ideas. And we look for the next big move. So thank you, and catch you on the next one.